Ladies and gentlemen, good day and welcome to the Q2 FY23 earnings conference call of Sheela Foam Limited, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Bhuwania from ICICI Securities. Thank you, and over to you, sir.
Good evening, everyone. It's our pleasure at ICICI Securities to host earnings results.
Sorry to interrupt you, Mr. Karan. We are unable to hear you. Can you please speak a bit louder?
Sure. Good evening, everyone. It's our pleasure at ICICI to host Sheela Foam's earnings conference call. From the management today we have Mr. Rahul Gautam, Managing Director, Mr. Rakesh Chahar, Whole-Time Director, Mr. Tushar Gautam, Whole-Time Director and CEO of India Business, Mr. Nikhil Datye, Group Chief Financial Officer, and Mr. Davinder Ahuja, Group Finance Controller. I'll now hand over the call to Mr. Rahul Gautam for his opening remarks. Thank you. Over to you, sir.
Thank you, Karan. Thank you. Thanks a lot. As usual, we will begin with our vision statement. Our vision: we will continue to be recognized as a leading organization in quality comfort products while practicing values of integrity, reliability, proactivity, and transparency, to do business with a smile, for customer delight, and a commitment to society. Thank you. Thank you very much. So thank you, Karan, once again for hosting this call on behalf of ICICI Securities, and a very good afternoon to everyone joining us today, and wish you all a very happy Guru Purab. It's my pleasure to welcome you all to the earnings conference call for the second quarter and first half of the financial year 2023. I just wanted to say something upfront as far as participation is concerned. So, Mr. Nikhil Datye is today unwell and is not able to attend the conference. However, at the same time, I also want to add that he's originally from Mumbai, but he's the process of transferring and changing, and there were personal difficulties in getting admission for children, etc. So he is unable to continue with Sheela Foam, and with effect from early part of December, we will then put a process on to get a replacement. Let me first take you through the quarterly and half-yearly financial highlights, and then discuss some of the operational and industry highlights. For the second quarter under review, on a consolidated basis, we reported a revenue of INR 722 crores, which were down by about 8% on a year-on-year basis and about 1% on a quarter-to-quarter basis. EBITDA margins for the quarter were reported at 10.84%, which was an improvement versus previous quarter, but still down against the same period in the previous financial year. Net profit stood at INR 54 crores, which was down by about 30% or so on a quarter-to-quarter basis. First, to talk about the raw material scenario, both our basic chemicals, which is polyol and TDI, have been experiencing a little bit of a downward trend. Polyol prices continued their consistent movement downwards, while TDI prices also cooled off and then have been fluctuating thereof. This has definitely resulted in an improvement in the gross margins across various geographies that we operate on. Uncertainty still looms large, though clear indications of the volatility settling down are on the horizon. The year-on-year decline in revenues were primarily due to softer demand in our India and European business, while Australia continued to perform well. For India, we have registered a growth of 15% in the H1, and Australia, as I said, has been doing well, while Spain whatever has been happening in the European continent due to the Ukrainian war has been experiencing a downward consumption and therefore a downward production. In India, the revival in consumption patterns is slow due to the inflationary pressures seen across consumer durable companies. The global economies do continue to face headwinds due to certain geopolitical situations and high inflation. The rising interest rates across the globe to fight inflationary pressures are weighing in on economic activities and consumption patterns. Similar to last quarter, the auto industry continued to do well for us in India, resulting in good volume and revenue growth in our technical foam products on a year-on-year basis and quarter-on-quarter basis. Although this quarter, the mattress segment, furniture foam products, and comfort foam products witnessed some decline on a year-on basis. Decline in consolidated EBITDA margins are primarily due to the increase in sales and marketing expenses by 37% year-on-year and 24% quarter-on-quarter. For the first half of the financial year 2023, consolidated revenues stood at INR 1,451 crores, reflecting a growth of 9% with EBITDA margins at 9.94% and a net profit of 96 crores. I must share with you that in our recently concluded board meeting just a few hours back, the board has approved a 1:1 bonus on the existing shares. So I think this should bring some cheer to the investor community. Also, the board discussed in detail the dividend policy, which is being fine-tuned, and we will be ready as and when the time comes. In conclusion, despite the macro challenges, we believe that the inflationary environment is slowly cooling off, and with our revived efforts in sales and marketing and the extra expenditure that we have done there, we believe that the financial revival is around the corner. We can now open the floor for the questions and answer session. Thank you very much. Over to you, Karan.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ritesh Shah from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity. Couple of questions. First on a cash flow, second on manufacturing, and third, more to do with the revenue streams that we are looking at. So first on MA or cash flows, I think prior to conference calls, we had indicated that we could be looking at a few acquisitions, and the timeline which was cited was October end. If you could provide some color over there on what we could be looking at, any numbers that would help. That's the first question. The second question is on third-party manufacturing. I understand that we have started this at a couple of places in India. If you could please highlight the rationale behind this. What are the product, I think I understand Starlight is one of the products which will be under third-party manufacturing. So more of rationale and some numbers over here. That's the second question. And the third question is into 4 parts. So one is exports. Hasn't really come off from the Nandagaon facility. I think earlier the problem was ocean rate. That seems to be cooling off. Any numbers over here will be useful. Second is any feedback on the e-commerce side. Last quarter you indicated that we have launched Sleeper. How is it actually faring in the marketplace? So that's the second part of the third question. Third is Indian Railways. Any numbers over here? Any updates? And fourth is timelines on Jabalpur expansion along with launch for Mattress for Every Indian. Thank you so much, sir.
Thank you, Ritesh. Thank you. That's a lot of questions. So let me first begin with the first question that you've asked regarding acquisitions. You see, we don't do this day in and day out, and what we are experiencing that these things always take a little longer time than what you think they should when you especially go down into details. I would only say that a couple of them have progressed well. They are close to the final run. However, giving any more details on that will be a little out of place at this point of time.
Sure.
On the third party manufacturing, I presume that you are talking about outsourcing manufacturing of Starlight. Is that correct?
That's right.
Right. Okay. So we are doing that on a standard basis, and I think there are two units who do that for us, and the products, however, are completed there, and they come to our place for the final quality inspection, and then we are going ahead with that. However, let me just say that we continue to have some flexibility on that, in the sense that if the markets are down and or the volumetric productions are less, then we do that more of that in-house and lesser from outside. So there is flexibility on it. There was a question on the Indian Railways. So
sir, so sorry to interrupt. So can I just ask you for the rationale for this particular outsourcing or third-party manufacturing? Is it purely lead time, or is it we are looking to improve the ROCs, working capital? How should one understand it, sir?
Ritesh, I'll take that. I think the rationale for that is very simple. It's a very low value item. We are anyway sourcing bulk of the core and fabric materials for that. Whenever we have capacity constraints in our facilities, it makes sense to outsource it as a finished product and bring it into our warehouses and then distribute onwards, rather than putting up any fresh capital investment and things like that for a product like this. But like Rahulji said, during the year with seasonality, its volume of outsourcing moves up and down depending on how much free capacity we have ourselves.
Okay.
Sure.
Okay. So before I let Rakesh take the railways question, I just want to update you on the Jabalpur project. That is a matter for every Indian. Last time, and even the time before that, I had shared with you that there was some delay in the supply of equipment from England on account of steel, etc., which was actually available only from a Ukrainian plant. However, all that has been kind of sorted out, and the machine is on its production. We should begin to receiving parts of it by the end of this year, and I am sure that by in the first half of next year or the middle of next year is when the production will start. The civil facilities and the infrastructures are all complete, and some of the ancillary equipment, etc., is already in place or getting in place. We are looking at possibilities where we can manufacture before the machine arrives. If we can manufacture some small quantities of the grade and the quality that we want, so that the project can probably start a bit earlier. And while being on that project, may add that the front end work is also in full swing, which is the products, the markets, the ways of distribution, etc. Now just request Rakesh to update us on the railways bit, please.
Yeah. So railways is progressing well. The material has got very well established now. So whatever kind of opposition specifications, so the existing material lobby, so that all seem to kind of getting settled now. And so we are now getting to a good run rate monthly, and it's progressing well.
So would it be possible for you to give some numbers or some detailing into what all regional divisions that we are already supplying to? What's the opportunity size?
So we are supplying to seat and berth manufacturers who in turn supply to the coach factories. So the current run rate is close to, we started doing about 200 coaches or 250 coaches a month, which is growing month by month. In terms of revenue, it will be about 4 to 5 crores a month. That's the current run rate that we are doing.
Okay, Ritesh?
Sure. Yes, sir. And sir, two more questions pending. One was on exports, and secondly was on e-commerce. Feedback on Sleepwell.
Okay. Tushar, you want to take one on the export?
Yeah. So, Tej, the export side has, like we discussed last time, was primarily struggling on account of extremely high freight charges from India. Those have eased off in the last quarter. They have normalized. The other thing that's normalized is because of the slowdown in the U.S. market, a lot of our customers had stuck inventories which they had already imported. All of that's kind of eased off, and from first week of October or so, we are starting to see our existing customers buy more and more, and those orders have started coming in. So this quarter should be a good quarter for exports, and that ramp up that we had planned for should actually start to accelerate now.
And Rakesh, can you just respond to the e-com position, please?
So, Sleepwell is introduced on both the platforms, Amazon and Flipkart, in late September. So the response in October was very encouraging, both on the marketplace and also on our website. So now we are ramping that up, and we also will be running our campaigns for promotion of the 3 SKUs that we've introduced. And this is actually an omni-channel. I mean, these products can also be booked on the offline channel. So I think it is settling down, but the initial response has been quite encouraging at the price point that we have positioned it.
Sure. Thank you so much for the detailed answers. I'll join back with you. Appreciate it.
Thank you. The next question is from the line of Nihal Sham from Nuvama. Please go ahead.
Yes, thank you so much and good evening to the management. So a couple of questions from my side. First, you did highlight that the current environment remains a little impacted, specifically on the mattress side. But if I had to just ask you that at least the activity from a lot of the other D2C brands in the mattress space has started getting very aggressive. Would you believe that there could be any impact from that specifically happening and that also being an added reason to the overall consumer sentiment?
Nihal, I'm just going to repeat the question so that I've understood well. You are referring to the competition activity in the market, which is heightened at this time. And the question is that is it going to make any big impact as far as Sheela Foam is concerned? Is that correct?
Yes, and I was specifically referring to a lot of the direct-to-consumer mattresses brands that have come up over the last 3 years. I would assume at least 4 or 5 of them. So is that a bigger reason than maybe the overall slowdown, which is, say, impacting the performance across the offline mattress industry, not just, say, specifically to Sleepwell or Skylight or Sheela Foam?
Rakesh, why don't you take this?
So, yeah. So I think you're referring to the e-com brands,
Yes,
which have been aggressive. So yes, it has an impact on offline in 2 ways. One is there's a consumer who is now looking at the price, at the offering, and he's also looking at the same kind of bargains in the offline, which is not easy to get because dealer also has to make his money. So that is one disruption which does impact the offline. And second is I think it's because it's still a small market growing at a faster rate than offline. It's about 25-30%. So, but it is still in the realm of 1,200, about maybe 6-7% of the total market. So I would say that yes, it is a upcoming channel which is getting evolved, but the impact on offline is more a new channel having its own ways of servicing customers, offers, COD, 100 free nights. So those are the things which the retailers are not kind of equipped to handle, but the brands are, I mean, more and more brands are kind of working with the retailers to bridge that gap. But I would not attribute it only to the e-com. I think it is more to do with the environment, the consumer sentiment.
And Rakesh, if I may add to this, that all this heightened activity that is there, to my mind, it's only expanding the mattress market, expanding the organized mattress market, which derives its source from the unorganized sector, which is an extremely large sector. Therefore, my take on this is that all this activity is helpful. And the other little comment that I would want to say, because we are also present strongly in the e-commerce market, that e-commerce business, as it stands today, is not a very profitable business here. I mean, eventually, people will have to figure out ways to exist there, that is by margins or reducing discounts, etc. But otherwise, it's not a sustainable business. So just these 2 points. One, or whatever activities are going, whatever rupees are going into advertisements and talking points, etc., and the noise it's creating, good for the business. Not so good for the companies who are doing this.
Understood. And just to follow up on that would be that from our side, we have SleepX as a brand which is purely online, and we have limited SKUs of Sleepwell which we have recently got on Amazon and Flipkart. That is the way we are approaching this channel. That would be a right understanding?
That is correct. And also ensuring that there is some sanity in this wild thing which is going on, where the brand has an opportunity to grow, where you still make some money out of it, etc., and give your larger market of offline enough foundation and enough strong feet to stay strong.
This is helpful. One last question would be that given the recent correction in raw material that we've seen, how do we plan to use this benefit? Do we plan to reduce our prices? I know you've highlighted about a spurt in sales and marketing, but would there be pricing action on our products if raw material stays lower?
Sorry, I didn't hear that clearly, but you are talking about reduction of prices, are you?
Yes. Given that we've seen a correction in the raw material price, and I'm assuming that sustains, would we reduce the prices of our products?
Generally, we don't do that. In fact, when the prices are to be increased, we also do not exactly commensurate with the increase of raw material that has happened, because the market's being structured in a way cannot take these wild fluctuations as the raw material people do. Therefore, we have increased prudently. We generally do not reduce the prices. If an offering needs to be tweaked up, we will do that. If some other additional thing needs to be given with a mattress, we will do that. But price reduction is not the order of the day.
Understood. Thank you so much. I wish you all the best.
Thank you. The next question is from the line of Sohini Andani from SBI Mutual Funds. Please go ahead.
Hello. Yeah.
Yes.
Yeah, good afternoon. I just wanted a little more understanding on, the increase in sales and marketing expenses that we've seen both year-on-year and quarter-on-quarter, and also the fact that, our mattresses sales have actually declined during this period. So if you could just if you could just explain, on what areas have we spent this, and the dichotomy a bit in terms of actual mattresses sales being lower. So it would be good if you could explain this in some detail.
Yeah. All right. Thank you. Thank you. I think Tushar will do that, which is, I think, primarily your question is increase in the sales and marketing expense while the number of mattresses have declined. So there, I think both are following a different curve. Tushar, can you just explain that?
Right. The way that we are looking at that is from a baseline, let's say, of H1 last year or quarter 2 last year, which were very, very unusual. Q1 was virtually a dead quarter, and a lot of these, especially the marketing side of it, and even some, trade promotions and channels and all of that wasn't there. Over a period of 12 months, it's certainly come back to what the normalized levels used to be 2 or 3 years ago. What is really that's on the sales side, but what is really extra is marketing expense, and that's something that we are focusing on, getting the brand more visible, also investing in some of these newer channels where we are starting to expand the Sleepwell brand, like the e-com side has come now. But there are a couple of other developments like this that are ongoing, of special channels, special businesses in which we intend to expand the Sleepwell brand. So there are some marketing investments that are related to that which have gone up or which have been front loaded at the moment.
Sure. Yes, thank you.
Thank you. The next question is from the line of Resham Jain from DSP Investment Managers. Please go ahead.
Yeah. Hi. Good afternoon, sir. So I have a few questions. So first one is on the in the past when we didn't had Starlight and Feather Foam, or rather the high value products where the mix was higher. I think the larger contribution used to come from the marriage related buying patterns. Obviously last 2 years those events got postponed and stuff like that. But what we are hearing now is that the upcoming marriage season seems to be quite strong, and that is another way you used to market in the past. So any comments around this, specifically on the marriage-led demand of your products?
So I would say yes, wedding time continues to be a strong time for us to market or to sell. And this time what are the dates, Rakesh, that the weddings they have started yesterday or two? 4th. Okay. So right through up to 19th of December, I think. Is it?
14th of December.
14th. So this is a strong season, and you can always feel in the air that mattresses are being sold more. But definitely, this is a strong time, and we should have.
I think it's a phenomena more in North, which is related to marriage. It has a very little impact on the other zones, but North for sure. I mean, the impact is large.
Yeah, because I think the other zones they marry whenever they want.
Yes.
And so for sure, the point that you're making, Resham, is strong. This is a good time, and you would see good sales at this time.
Okay. This should improve the mix as well, right? The price points.
Yes.
Okay, got it. So the second part is, I think, on the digital spend, because as you mentioned, e-commerce is where the competition is, and I could see that in terms of Google searches and all. Also, earlier, whenever we used to type Sleepwell, the competing brand used to come at the top. I think that has changed little bit, but not fully. So how much spend has to happen on this side to be relevant? Because with the aggression on the e-commerce side, the relevant spend also has to happen, which is unlike a traditional company where the economics are quite different. Some of the competing brands are okay not earning money. So how will you approach this whole competition in this regard?
So, generally, I'll take that question. You're absolutely correct, and like you're saying, you're starting to see some green shoots there, which is primarily on account of, I would say, a month and a half of extra spend and extra work on the digital platforms. Not just Amazon, Flipkart, but on Google Search, Facebook, YouTube, all of that stuff. More and more as we move along, we will focus primarily on television and digital. That's where the breakup of the brand spends will be. And a lot of the traditional spends are slowly ramping down, and those resources are getting transitioned into digital. That's one side of the efficiency. On the other side, just to give you an example, in September and October, we would have resourced the digital spend at least 7 to 8 times of what we normally do in a month. And I don't see that slowing down. So as we move along, you'll see more and more of that. Okay, understood. Can I ask one more? Just to understand on the e-commerce side, the SleepX and Sleepwell now both will be present online. So from differentiation standpoint and marketing, because marketing, there is a limited budget in terms of how you want to position your brand and spend. So how will you now do? Because earlier you used to do more from SleepX perspective, but now you have to do for Sleepwell as well. So how should one think about this? So I think just think about it in a way that we started SleepX a couple of years ago when all of these other brands were coming in. Looking at the model, looking at the conflict between online, offline, we thought it's better to do it with a separate brand. Of course, it's grown, it's competing with the other e-com players, and it continues to compete. The long-term play, the sustainable play is for Sleepwell to be present in that channel and take a larger share of it, which we started about a couple of months ago. Like Rakesh ji said, good first indications. It's a product and a model which we worked very hard to develop a omni-channel experience where I can compete on an Amazon, Flipkart website and compete with all of these other new e-com brands, but at the same time, a consumer can also access the same product, the same offer at the same time at any of my retail outlets. So from our perspective, we think the Sleepwell brand getting access to this new channel, which is, let's say, about 6-7% of the overall market, is the sustainable way to progress, and therefore the resource allocation of marketing will be more and more towards people.
Okay, sir. Perfect. And if I just add to that, that number one, Sleepwell is the brand, is our flagship brand. That's the sustainable one, and that's what we would be working on. This was a new territory, a new unknown territory, and therefore all the exploration, all the initial experience, etc., was done using SleepX and not to sort of fool around with the Sleepwell brand. Now that We are learning the trade. We are learning the processes. It would be more and more a sleeper for sure.
Okay. Thank you, sir. All the best.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Chetan Shah from Jeep Capital. Please go ahead.
Yeah, hi. Thank you for an opportunity. Sorry, I'm just looking at your company for the first time, so my question may be a little novice. Just wanted to understand our geographical growth opportunity. So I have kind of historical data, but how do you see the things moving in next 2 to 3 year time horizon? How do you see the opportunity size and scale? One is that question, and second is, are we looking at any complementary businesses apart from mattresses, what we sell as of now, as an opportunity to give a kind of a bouquet of product to the customer who walks into our store or buy our products?
Okay, thank you. I'm just repeating the first question so that, again, we've understood it properly. You are saying that how is the geographical growth going to be in the next 2 to 3 years? That's the geography right. of India we are talking about. Is that correct?
That's right, sir. One is India, and how do we see the global opportunity also? If you can share some form of opportunity in that, yeah.
So our philosophy or our thinking on this is clear, that when we look outside of India, we look at an opportunity which is on the operation side, manufacturing side, where all the experience of sourcing of raw materials, formulating the products, and manufacturing them on the best possible equipment with the best possible technology, that is what we excel in, and that is what we will look at outside. So whether the current ones also, which is Australia and Spain, we limit ourselves to manufacturing the best possible foam and the best variety and giving it to the customers. When it comes to going beyond that, that is the consumer, the distribution, and the consumer and the customer. That is where we look at India, and that is how we are structured and integrated here. Because we understand the culture, we understand the ethos, we understand the consumer. Outside, we don't do that, and therefore we don't. So just to simply put it, consumer business, India, just manufacturing of foam and excellence in foaming and foaming processes outside India as well as outside India. Coming back to the question of geographical growth, undoubtedly we are strong in the northern part, the western part. We're getting stronger on the southern part. We may be a little weak on the eastern part. But eastern markets are also relatively small compared to the other ones. It's completely the way that the country is. If you look at it, it's a inverted triangle, and then you have the rivers flowing, and that's where the people live, and that's how what we call as the northern part of it. So though we are strong, but where we are strong, the opportunity is also larger, and because the opportunity comes from the unorganized part of it. The other places, we may not be that strong, but we have the processes in place to get stronger, to get to the position where the brand has similar kind of dominance as we have in the northern and western part of it. And therefore, the growth to me, my mind will come all over the country, different places for different reasons. The second question that you had on the complementary business, we do things like pillows, we do bed sheets, we do comforters, we do bed sets, and anything which goes on top of the bed. They are doing it, and this is going into the stores, and in times to come will act as extra attraction for the consumer when he or she comes into the store. However, beyond that, the only other category which is somewhat related, both in terms of consumption of foam as well as in terms of the way that the markets are structured, that you generally have furniture and mattresses or bedroom beds and mattresses, and they are generally kind of sold together. So it's very fragmented. It's very the varieties and the SKUs and all that are phenomenal. However, we have a play in this, and we have some programs. At this point, I'll only say that we have some programs. I may not be in a position to discuss them any further.
Yeah. Thank you so much. Just one a broad last question from my side. In terms of while answering one of my previous question, you kind of alluded about technical capability and also manufacturing excellence. Could you also give us some sense on, because historically, if we see a decade back or so, people were not very choosy or a selective about the form in which they sleep or they sit or they use in their furniture. But now that awareness has kind of improved. So how do you see this change of consumer mindset which has evolved can help you, and you also want to take advantage of that with your maybe R&D capability or technical capability and give a better product at a better price point? Any thought on a broader sense will be very helpful. That's it from my side, sir, and wish you all the best.
Thank you. Thanks a lot.
Thank you. The next question is from the line of Resha Mehta from Greenedge. Please go ahead.
Yeah, thank you. Again, fairly new to the company. So the first question again is on the e-commerce channel. So if you could just comment on, how big is this channel for mattresses in India? And also, what would be our market share? And would Feather Foam and Starlight be also available on the e-com channel? So that's the first question.
Okay. Tushar, would you answer that? How big is the e-com channel? What's our share on it?
The overall mattress market would be approximately 15 to 16,000 crores for the consumer. E-com this year projected is approximately anywhere between 1,000 to 1,200 crores, and we should finish the year at about 10% market share. On your second question, Feather Foam Starlight will not be available now.
Okay. So what really is the positioning of, or rather, what is the difference in the positioning of Starlight and Feather Foam brands? Because I believe both are sold through MBOs and are in the price range of 5,000 to 20,000, if I'm not wrong.
The Starlight is lower. Starlight is a lower end brand, and that's only anywhere from 4,000 to 8,000, 9,000. Feather Foam is the little more premium, larger offering brand from 5,000 to 20,000. That's correct. Or now a little higher as well.
And out of a total mattress India revenue, how much would be coming from Starlight and Feather Foam?
About 10%.
Okay. And on the exports front, if you could just give a general sense on that, after China ceded this place, which are the major countries that are exporting to US and EU, and would our exports be branded or white labeled, and just the margins and working capital here?
Yeah. So exports generally from the China plus one piece, what's really happened in the export of mattresses to the US is, step one, there were anti-dumping duties and resistance to buy from China. Primarily the Chinese mattress exporters shifted shop to Vietnam, Indonesia and places like that, even some in Eastern Europe and things like that. Those have all got covered under the anti-dumping regime of the US. and therefore India is still in a good position to export. That was primarily our play there. In the interim, two things that are negative have happened. One was the escalation in transport costs. So container freight from India, which were normally $3,000-$4,000, went up to $18,000-$20,000 in the last 12-18 months, and they've now come back to normal. The other thing that happened was consumer demand in the US really dropping, and a lot of inventory stuck in the system and all of that. So all that's kind of gone. That's why we're starting to see good traction from customers for supply of white label mattresses into the US. So that's starting to happen for the last 45 days or so. The only other thing, sorry, did I answer all your questions?
Yeah, so margins and working capital here, and also what we sell is essentially white labeled mattresses, right?
That's correct.
Okay, and the margins and working capital here, and also India is not seeing any anti-dumping duty?
Well, not yet. Not yet. Let's hope not. Let's hope not. So that's why we kind of hedged that US supply by also supplying product out of our Spanish entity, with the assumption that a European Union country coming under anti-dumping from the US will be a very, very tough ask. Even if India gets covered, we have the capability to service customers from Spain.
Got it. And working capital and margins here?
So working capital we are generally very conservative on, and payment terms are at best 20 days or so from dispatch, at best.
Okay. And lastly, on the rural distribution plan, if you can elaborate on this, and also I think it was mentioned that we may enter the furniture segment. So any progress there?
So I'll park the furniture question maybe for 3 months down the line. And like Rahulji said, we're not in a position to respond to that at the moment. On the rural side of things, Rahulji has already commented on the capital expenditure in Jabalpur with this intent and the status of that. What we are doing parallelly is to really do the product development, the distribution development, the brand development in a small piloted territory, so that all of that is good to go by the time the facility is up and running, which is probably anywhere from 9 to 10 months away. That's generally the outlook on that.
Right. And if I can squeeze in one more, what would be our revenues from metros, tier 1, tier 2, tier 3 rural currently? Like, let's say on an annualized FY22 basis.
So I'd say metro tier 1 is about 70%, and tier 2, tier 3 would be about 30%. Rural will be virtually zero. I mean, if I look at my retail outlets and their sales, that's what I'm telling you right now. There would be consumer behavior of rural consumers coming to the closest big town and buying some Sleepwell products from an existing retail outlet. That's standard consumer behavior for all big purchases in rural, and that would be happening even now.
Right. All right. Thank you, and all the best.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your questions to 2 per participant. The next question is from the line of Pankaj Sibhewal from Kotak Mutual Fund. Please go ahead.
Yeah, good evening, Rahul.
Sorry to interrupt you, Mr. Sibhewal. We cannot hear you, sir. You're sounding very low, sir.
Can you hear me now?
Yes, much better. Please go ahead.
Yeah. So my first question is that though we have seen improvement in gross margins on a console basis, but that has not flowed down to the EBITDA and the PAT. And primarily what you explained is the marketing overheads which you have done. As you move into the second half, any comfort you can give us on the margin expansion from a overall profitability and PAT margin? That's one question. The second is that the observation is that Spain has seen a very sharp gross margin expansion. Any one-off there? Because in a rising, in a bad environment where revenues have gone down, we have seen a very sharp expansion on margins in Spain. And that has led to overall company gross margin also, kind of improving. And the last one is that cash flows have been weak in terms of generation. Can you help us understand how do you intend to improve the cash flows as you move into the second?
Thank you, Pankaj. Thanks a lot. Tushar, will you take the first one on the H2? To give some comfort without giving all the details.
I think on two fronts. One, I would just say the quarter two results that have been released right now are also distorted from a July, August, September perspective. September being extremely good on the margin front. The average, of course, is what has been released. What that means is that the September P&L or the margin issue of September is going to continue, or we're seeing it continue in October, November, coupled with a better mix and higher sales on account of quarter three season, marriage season, sleepwell products selling more than or having more of a ratio in overall sales, etc. So, just reiterating that point. September was better than August. August was better than July in terms of margins, and we see that continuing. And of course, the extra sales and the better product mix for quarter three. So that should be maintainable and comfortable. What's the second question?
Spain. The question was on Spain.
Spain, Pankaj, I think something very strange is going on. Yes, the market is depressed. Raw material is short. But prices of raw materials are still a bit higher than India or significantly higher. But because there is shortage of raw material, we are able to maintain our margins. We are able to pick our customers. We are able to hold on to prices and maintain our margins in Europe. I'd say Europe is going through something which is very unusual, and will have stability probably after this winter. That's what everyone in Europe is waiting to see, how the winter progresses, how is the European Union able to sustain itself with the energy issues and things like that. However, I'd say for us, what we have said is, yes, there is a drop on existing customers and existing market, but because we are only 1% of an overall extremely large market, there are still opportunities for us to grow. We were constrained a little bit by availability of raw material, but those supply chains we have changed over to Asia now, and now that we have enough raw material, we have started to go out after growth, and I don't think there should be any limitations to growing that business, irrespective of what's really happening in the overall market. That is on Spain. On the cash front,
cash flows, I think primarily, Pankaj, it's because of lower sales and Devinder, why don't you answer that?
Yeah.
So there's a sales and there are certain expenses which have gone up this time, which resulted into lower cash from operations. Besides that, there are also working capital requirement in the market where we have extended certain credits, which resulted into a lower operating cash flow.
So I think it's just lower sales and an extended credit, which is brought about. But the credit is
temporary.
It's temporary and very secured.
Okay. And just last one, Spain has seen a normal increase in gross margins from 22, 23% to 31%. Do you see the situation where in the second half India does much better, we recoup all our gross margin losses? Australia continues to be steady, but Spain again sees a setback on gross margins and then the overall console margins again dip. Is that a probability, or you think Spain can sustain the margins as the situation is today?
So I think the 20-odd% that you're talking about, that was the unsteady point. I mean, that was the bottom point that was there. That's when the raw materials were violently fluctuating around. But I think slowly kind of steadying down, even if the Ukraine war continues, the people are finding ways, whether it's getting the raw material from the Asian region or importing elsewhere, manufactured out of here, etc. So I think the 20-odd%, 22% was the low one. It will go up. I think it should be steady between 35 and 40. And as far as India is concerned, we are also experiencing the raw material kind of reduction which is there. So I see that the margins are going to be much higher than where we are in the coming times here.
Okay. Thanks. Thank you, and wish you all the best. Thank you.
Thank you, Pankaj ji. Thanks a lot.
Thank you. The next question is from the line of Resham Jain from DSP Investment Managers. Please go ahead.
Thank you for again giving the opportunity. Sir, just on the export side, as you mentioned, things are looking up now. So how much time do you think it will take to ramp up the export facility which we have set up? And what could be the optimal throughput from this plant?
The facility is up and running completely. Just to keep it, when the export side was a bit slow, just to keep it going, we put some of our Indian products through there. I mean, it's ready to respond to any demand that comes from the export side. So no issues on ramping up the facility at all.
No, my question was to ramp up the whole facility to, let's say, 80 to 100%. How much time will it take? Do you think it will take 3 months, 6 months, 1 year? And once it reaches that level, how much throughput can come from this plant additionally?
So you're talking about the demand side then, right?
Yeah, on the export, because that plant is dedicated for exports. So I was just thinking from that plant perspective, because those kind of product can be manufactured only from that particular plant.
Approximately, so from the customer order side, approximately 5 to 6 months to ramp that up to full capacity. And at that point in time, it should be doing close to 5 containers a day.
Okay. Okay. In terms of revenue, sir, because containers we will not be able to understand what will be the revenue potential.
One container is 400 mattresses into $100. About 4 per day. Roughly about between 1 to 1.5 crores a day.
Okay, perfect, sir. Great. Thank you. Thank you, sir.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity again. Sir, just wanted your views on the distribution side. Most of the online-only players in the marketplace, they are also now looking at omni-channel and looking to aggressively add stores. I think based on our recent checks we did, we did find out that we have been appointing new MBOs as well, and also basically putting some accountability in the system. I think we didn't have any targets for EBOs and MBOs over the last 2 to 3 years. Probably it could be on back of COVID. So, sir, just wanted to have your sense on distribution. Also, if you could give numbers on how many Shoppies, galleries, and World we have right now. Yep.
So, Rakesh, would you take that question? That's the total number of Worlds, galleries, and Shoppies.
Yeah.
And the question is that because of the COVID times, etc., there were no incentives for those people. So, are you thinking anything in that direction?
Yeah. So, as far as the showroom format, which we call them World and Galleries, they are 1,500 plus. The Shoppies are for 2,200, and rest would be the exclusive dealers. And they also, the network has been also growing. Like, just to give you a sense, that since April we have added about 100 showrooms in the first half. As far as the sales targets are concerned, how we are approaching EBO is a little different. We are focusing on improving the productivity inside the store, which is the conversion, the ASP, and the attach ratio. So we have a program which is wherein we have deputed people to help retailer to get onto these metrics and start with the baseline and then start improving on the conversion on the ASP, and because that's where we believe the sale is going to come from, the same store. So that's the EBO part of it. I hope I have answered your question.
Yes. And on the MBO side, I think we were not very aggressive on adding MBOs. That is something which has probably changed over the last 6 months. Also, I think on the incentives on how we are actually incentivizing the guy to actually also put the Sleepwell into the shop to make the sale happen actually.
So we have started a new network. We are calling it a cushioning partner, and so we started this program in this year from let's say the end May, beginning June side. So we have created about 1,500 such people who have some products of Sleepwell and a complete range of feather foam. So here the belief is to instead of approaching thousands of MBOs, to focus on this set of let's say we have the plan to go up to 2,000 dealers in this year and focus on them and push them towards exclusivity. So that's what our plan is with this network. And MBO, since we also deal in comfort foam and Starlight, so that is left for MBO, where I mean there is a team which is working on that, both on the comfort foam and Starlight MBO. But there also we are going not by the number, but to deal with maybe 1,000 MBOs and get better extraction out of them. Because our learning in past has been that though we were able to appoint many MBOs because they all wanted some connection with Sleepwell and Sheela foam, but the extraction was very poor. We were spending far more energy and time in visiting those dealers and not getting enough business. So there's a change in that outlook that we've kind of. I mean, we're approaching more for extraction now as far as the MBO business is.
Right. So this is very useful. Just one follow-up. Sir, what is the end result that we are looking at? Do we have any metric when we are looking at revenues for EBO or MBO?
So what we are looking is that we need to expand our EBO network. Currently, it stands at 5,000 plus this new network that we're developing, another 2,000, 7,000. So we want to expand it to about 10,000 in the next 2 years, which would be having a retail footprint of 20% plus.
Sure. This is helpful, sir. Thank you so much.
Thank you. Thanks, sir. Yes.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you. Thanks a lot, and thank you everyone for participating and actually making some positive suggestions for us to take home. As usual, it was a great learning exercise for all of us. I hope we've been able to answer your questions satisfactorily. And if you do have any further questions or would like to know more about the company or its working, please reach out to our investment relationship managers at Valorum Advisors. I want to conclude today with this note that whatever recently reports that I have been reading from all authorities, whether it's the World Bank or IMF or Morgan Stanley, etc., I think the whole world believes that India is the country of the decade, or is going to be the country of the decade, with at least a 6 to 7% growth. And soon, recently, of course, we have become the fifth largest, but soon we would become the third largest, which is a good feeling to have and a good hope to have. So thank you very much once again, especially that today was a holiday and that all of you turned up and we could have this meaningful interactions. With those words, I just say good night and sleep well.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.